Hey, it's TaxQuips time from TaxMama.com. Today, TaxMama hears from Terri in the TaxQuips Forum with this question. She says, I'm a California business. Every year, we did an annual return for federal unemployment taxes as a reconciliation for the payments we make each quarter. We did the same thing for California for state unemployment. But beginning in 2011, the state of California requires us to report the California unemployment payments quarterly with our personal income tax withheld and state disability. Has the reporting stayed the same for federal unemployment taxes? Hi, Terri. Nothing has changed for IRS. In fact, I doubt anything has really changed for EDD either. Your payroll probably increased. Bear in mind that even though the Futa wages are limited to $7,000, there's a big difference between what IRS collects and California's EDD. You may have noticed your Futa rate for IRS is 0.8%. That's like 0.8%. That amounts to a maximum cost of only $56 per employee per year. However, California's EDD rate starts at about 4.5%, and it goes up. That's over 5 times the IRS rate, so each employee costs you over $300 a year in California. California has a lot at stake, especially in a tough economy with such a high unemployment rate in the state. The unemployment they're paying out has to come from somewhere. As your wages and the number of employees in your business increase, you're going to find yourself paying much more money in SUTA, so California wants it before you end up spending it. Believe it or not, that's a common practice with small employees, spending the payroll money instead of paying it in. Not that you ever would do that, of course. And remember, you can find answers to all kinds of questions about employer taxes and other tax issues free. Where? Where else? At TaxMama.com.